In our first training module, I introduced you to the 5 critical reports that every small business needs to be aware of. I want to review those for you real quickly right now. The first one was your income statement, or your P&L statement as we typically call it. The second one was your balance sheet. The third one was your aging report, or sometimes it's referred to as a receivables report. Your fourth one is a cash status or cash flow report. And then the fifth one is optional depending on the type of business you have, and that's a job profitability or project financial report. Today I want to talk about your income statement, that first one, your P&L. And you've got an example of Widgets Incorporated there in your notes, and this gives you a picture of what that statement could look like. But before I get into it, let me remind you that in a previous training series, we talked about ways to get leverage. And one of the ways that we get leverage, in other words, we find ways to accomplish more in less time, is with technology. And I encourage you to make sure you're keeping good records, good bookkeeping for your business. And today, one of the most popular tools, pieces of software that is used in small businesses is QuickBooks. And I recommend QuickBooks. I actually use it in my own business. I use it in the nonprofit that I run. And so QuickBooks is a powerful tool. It's very versatile. And most bookkeepers are very well acquainted with it. And so if you don't use QuickBooks, at least have some accounting software that you use. It might be something specific to your industry, or maybe a simpler version that if you're just starting out. But use some kind of software, and again, I recommend QuickBooks. And one of the first things I recommend for new businesses to do is make sure you've got a bookkeeper. Now, most small businesses can't hire a full-time bookkeeper. So there are great bookkeeping services, and so you can outsource that. But you as the business owner should not be doing the bookkeeping. Let me say that again. You as the business owner should not be doing the bookkeeping. Why do I say that? You're thinking, of course I should do it. I should be in control of all the finances and the financial reporting. Yes, you should be in control of it, but the data entry and the processing of bookkeeping data is not the best use of your time. You need to use your time selling and thinking and leading your business. And so hire a bookkeeper or outsource it and get somebody else to enter that data and generate those reports for you weekly or monthly, whatever you need. And the first report you need is that P&L statement. Take a look at that statement there in your notes. There are 5 key parts to a P&L statement, and many times business owners will say, yeah, I get this report every month from my bookkeeper, but I really don't know what I'm looking at, and I don't know how to make sense of it. And so there are 5 components to it, and I want you to get all 5 of these and write them down in your notes. The first component is gross sales, and that's typically the top line, the very top line of the P&L. And so you'll see on this one it says sales, and some people refer to it as gross revenue, but that's your top line. That's a total of every sale you made during this month or during this period of time. That's the first thing you want to look at. And then when you look at that number, you want to ask yourself, am I doing more? Am I doing better? Am I going backwards? Where are my sales going? And it's also helpful once you've been in business for a year to go back and look at the previous year. What was I doing last year at this time? And do a comparison between this year's sales and last year's sales. A comparison between this month's sales and last month's sales. And kind of look at it and analyze it that way. The second thing you want to look at is called cost of goods sold. Sometimes it's abbreviated COGS. And this is typically your direct costs. These are the things that you sell, or it may be direct labor costs. You know, they are related to jobs, and you can account for it for particular projects or jobs that you're doing. But you want to know, what are those direct costs, those cost of labor or cost of goods sold? And you want to track that, because that's going to help you determine if the job you're doing is profitable. The third line, or the third thing you need to be looking at there, is your gross profit. Your gross profit is the sum of your gross sales minus your cost of goods sold, and that will give you your gross profit. And so that's a very important number to watch and to monitor. The fourth area that you want to pay attention to on your P&L is the expenses. And this is where you look at it line by line. How much am I spending on marketing? How much am I spending on things like office supplies, computer technology support, salaries maybe go here. Sometimes salaries go up in cost of goods sold. You may want to talk to your accountant about the best way for you to set that up. The way he sets it up is important for you because you want to let that accountant know, here's what I want to track and how I want to track it. And then he'll set it up the way that enables you to do that. But these general administrative and marketing costs are the things that go into the expense area. And then at the very bottom, the last thing you see is net profit. And so your net profit is your gross profit minus your expenses. And that gives you your net profit. And in most businesses, now think about your industry because your industry may be a little bit different. Some targets to shoot for are gross profit about 50%. It may be 10% more, 10% less, but most businesses are shooting for a gross profit of about 50%. Sometimes people refer to that as the gross margin. And so if you've got a 50% margin for most industries, that's pretty healthy and that's pretty normal. And then the next percentage you want to think about is that net profit at the very bottom. And we refer to that as the bottom line. The gross sales is the top line. The net profit is the bottom line, because this is actually the money that your business made this month or this year. And so a good target to shoot for in net profit is usually in that 15 to 20% range. And that's 15 to 20% of your gross sales, not your gross profit, but your gross sales. And so if you can in your expenses provide you a reasonable salary and at the end up with 15 or 20% net profit, you're going to have a very healthy, sustainable business that you can invest and reinvest in to grow. And so that's why this report's important. If I were the owner of Widgets Incorporated, every month I'd be looking at those 5 things: my gross sales, my cost of goods sold, my gross profit. Is it in that 50% range that I'm shooting for? If it's below what I think it should be, if it's below 50%, I'm going to look for ways to decrease my gross sales, my cost of goods or cost of labor sold. I'm going to look for ways to reduce that number so I can get that gross profit to 50%. And then I'm going to look at my expenses. And after my expenses, does that leave me with a net profit of, say, 15%? If not, I'm going to look at my expenses and see, is there a way to trim my expenses and adjust my expenses? Now, one of the main line items that is so controversial is marketing, because you can spend lots and lots of money on marketing. And the truth is, you need to budget for marketing. And in our marketing module, we talk about having a marketing budget. And people will ask me a lot of times, well, what percentage should I give to marketing? Some people say 5%. Some people say 10%. I don't think there's really a set percentage. You just need to market adequately to generate the amount of business you want to receive. And so if you can generate 5 clients for a certain dollar amount that makes sense to you, budget as much as you can, because everything you budget there is going to result in more gross sales. And so if I were in charge of Widgets Incorporated, I'd look at my gross sales, I'd look at my cost of goods sold, I'd look at my gross profits, is that about 50%? I'd look at my expenses, everything looks okay there. Does that leave me with a net profit of 15% or better? And then if my numbers are staying in those ranges, I know I'm probably doing pretty good. What do you do with that net profit? Well, you can do anything you want to do with it because it's your money. However, at the end of the year, that's what you're going to end up being taxed on most likely. So talk to your CPA. Make sure you have a good strategy to minimize taxes but maximize profits, and your CPA can help you with some strategies on that. So make sure you're looking at your P&L every month and make sure you're keeping it in a healthy place with the healthy percentages and healthy margins.